In this video, I'm going to show you how to prepare a Form 940. So the Form 940 is an annual form that has to be submitted to the IRS, and it's basically a reconciliation that shows how much FUTA tax or federal unemployment tax you should have paid and compare that to the amount that you did pay. All right. So here I've got a Form 940 that we're going to look at, and also a Form 940 Schedule A that we're going to look at. Okay. So, and I've also got this exercise here. So the Form 940 is always due a month after a calendar year ends. So in other words, after 2013, the 2013 Form 940 was due January 31st, 2014. Okay. So remember that basically the FUTA tax rate is it's basically 6% on the first 7,000 of each employee's wages, except that you get a 5.4% credit against that 6% rate if you pay all your state unemployment tax on time and in full. Okay, so as a result, for anyone that pays on time and in full, which is hopefully most everyone, they basically have a tax rate of 6 minus 5.4 or 0.6%. Okay, so most employers have to pay only FUTA tax on the first 7,000 at 0.6%. So here's our problem. It says the information given below was taken from the payroll records of Clegg Company, a California employer, for 2013. Use the information to complete the Form 940 and assume that all taxes were deposited in a timely manner. So in other words, their tax rate is going to be the 0.6%. Okay? So they had total remuneration. In other words, they have total payments to employees of $165,900. Included in that is $3,000 of employees' pre-tax contributions to a cafeteria plan. Because it's a pre-tax contribution, that means that it's also exempt from FUTA. Also, remuneration in excess of $7,000. So in other words, what was paid more and to each employee more than $7,000 was $66,670. Okay, so of the total $165,900, $3,000 and $66,670 is not taxable. Okay, and then I've given you what their taxable remuneration by quarters is, and we'll use that as well. Okay, so let's get started on our Form 940. So this part just looks basically just like the 941, right? Okay, and so I didn't give you a lot of information, but we know that the name of the company is Clegg Company. Over here on a 941, you basically have to check off what quarter you're reporting for. Well, since this is an annual return, we don't have to do that. So instead, they have these different type of return things. Most people don't have to check any of these because most companies don't have any of this happen. But if it's an amended return, meaning you already submitted an incorrect return and now you're submitting a corrected one, you would check amended. If you're a successor employer, meaning you have basically purchased a company and you have kept all of the employees, you've kept the EIN number, you're just kind of taken over, that would be a successor employer. If there were no payments to employees in 2013, or if your business closed or you stopped paying wages, it's going to be your final 940, you would check here. Again, most companies don't check any of these for most years. Okay, so let's go down and look at Part 1. So here they want to know about your return. So if you had to pay state unemployment tax in one state only, enter the state abbreviation. Here we're a California employer, and I'm going to go ahead and tell you we only pay wages in California. Okay. If you paid state unemployment tax in more than one state, then you're going to check here, and then you're also going to fill out this Form 940 Schedule A and check off which states you pay wages in. Okay. And then if you paid wages in a state that is subject to credit reduction, then you're going to check here. So let's talk about this credit reduction. So again, that credit is that 5.4% that most employers get if they pay their taxes on time and in full. So, but sometimes there's a credit reduction for even folks that have done that. And here's how that works. If a state government has had to get a Title 12 advance from the federal government to be able to pay state unemployment benefits to unemployed workers, then if they haven't paid it back, then then each employer has a credit reduction. So basically what this is the state government got a loan from the federal government. If they don't pay it back, then it is said that you have to pay, that all your employers in your state have to basically pay more federal unemployment taxes, okay? So it's 0.3% credit reduction for every year that the state hasn't paid back these loans. So let's see what California is if they're a credit reduction state. So we'll know by looking at our Form 940 Schedule A. And so you'll see some of these states, 0.000, they don't have a credit reduction. So in other words, their states don't have any outstanding Title 12 advances. But if you look at California, they do, right? 0.009. So they're basically 3 years in arrears on paying back their loans from the federal government. So we're going to come back here and to our Form 940, and we're going to check here. And we'll deal with that in just a little bit, okay? All right, so let's go to Part 2. So here we're going to do our total payments to all employees. So if we look back at our problem, this is taxable, non-taxable, everything. So $165,900. So $165,900. And then they want, in line 4 and 5, they want to know our payments that are exempt from FUTA tax. So in line 4, they just want to know what are some payments that you've made that are actually not taxable, okay? So here are the $3,000 of employees' pre-tax contributions to a cafeteria plan. And we're going to assume that this is something like health insurance, okay? So $3,000 for health insurance that was pre-tax, so therefore it's not taxable for FUTA. And notice that it could be for fringe benefits, group term life insurance, retirement or pension, dependent care. I'm going to check other because health insurance doesn't really fit in any of those. And then in line 5, we've got total of payments made to each employee in excess of $7,000. So here our number I told you was $66,670. So we're going to put that here in line 5. And then in line 6, they just want us to subtotal up what is not taxable. So $3,000 plus $66,670 would be $69,670. Then in line 7, they want you to figure out, okay, well, if that's not taxable, what of your $165,900 is taxable? So you just take $165,900 minus $69,670, and you should end up with $96,230. And then we can calculate our tax on that amount. So our FUTA tax before adjustments, and we'll see what those adjustments are in a minute, is just our $96,230 times 0.006 or 0.6%. And so therefore it's $577.38. Okay. So now let's look at Part 3. This is your adjustments. Okay. So again, as I said, the only way you can get that 5.4% credit is if you pay your state unemployment taxes in full, okay, and on time. So in line 9, if all of your taxable FUTA wages you paid were excluded from state unemployment tax, then guess what? You don't get the 5.4% credit. So you basically have to take what was taxable and multiply it by 5.4%. California is not a state like that, so we are going to keep going. Line 10, if some of the taxable FUTA wages you paid were excluded from state unemployment tax or you paid any state unemployment tax late, then you've got to go and calculate how much of that 5.4% credit you have to pay back, okay? So that would be in line 10. Again, we paid all of ours on time, so we don't have to worry about that. But in line 11, if your credit reduction applies, enter your total from Schedule A, Form 940. So this is where we're going to calculate that extra 0.9% that all California employers would have to pay. So let's go to our Form 940 Schedule A. And here we're going to just put in here for California our FUTA taxable wages, which are $96,230. And so then we can calculate our credit reduction amount of tax. $96,230 times 0.009 or 0.9% is going to be $866.07. And then we'll also, since that's the only line we have on here, we'll go ahead and put that down here at the bottom as well, 86607. And notice that it tells you enter that on Form 940, line 11. So let's go and put that on line 11 on our Form 940. And that's basically all you do on this Form 940 Schedule A. Of course, you'd have to submit that in with your 940, okay? And of course, I didn't put my name up here, but you would, and you put your EIN and everything up there, okay? All right, and so now let's go on to line 12. So here's our total FUTA tax after adjustments. So here we're adding up our 577.38, basically our 0.6%, okay? And then we're going to add in our credit reduction, which was that 0.9%. So if we add the two together, we get 1443.45. Okay, so that's really how much FUTA tax this company owes. Okay, 1443.45. All right, we're going to assume that we went ahead and deposited that this year. Okay, but actually where we would figure that out, let's actually figure that out. All right, so we're going to leave this for a minute and figure out how much we actually deposited this year. So we're going to look here, and I told you that we have taxable remuneration by quarters, okay? And so let's figure out how much we owed each quarter, okay? So 53,700, if we multiply that by 0.006, okay, then we should get 322.20, okay? Now, if you remember, the only time you have to deposit FUTA tax is when you have accumulated at least a $500 tax liability, okay? So would they have to deposit after the first quarter? No, because we haven't reached $500 tax liability yet, okay? Let's look after second quarter. In second quarter, let's see how much we owed. So again, I'm going to take the 24,940, that's what was taxable, multiply it by our 0.6% or 0.006, and therefore we get 149.64. Okay, if you add those two together, you get 471.84. So again, have we needed to deposit yet? Nope. Okay, so let's see after the third quarter. So we've got 14,360 that's taxable. So again, we're going to multiply that by our 0.006, and therefore we get 86.16. If you add those two together, you get 558. So we would have gone ahead and deposited 558 after the third quarter. Okay, so deposited after third quarter. Okay, so then in our fourth quarter, we have 3,230. We're going to again multiply that by 0.006, and we get 1938. Okay, so therefore we owe another 1938 after the fourth quarter. Okay, now a company never knows if they're going to have that credit reduction until about November, because that's when everything is published as to has the state paid back their Title 12 advance yet. Okay, so therefore, since they don't know about it until November, guess when they have to pay it? After the fourth quarter. Okay, so we calculated that the other credit reduction that they had to pay was 866.07. So when would they? So we're going to add that in, the credit reduction, 866.07. Okay, and so therefore our other deposit would be 885.45, and that would be deposited after the fourth quarter. Okay, so our total deposited, if we add up all of that, is 1443.45. So let's make sure that equals what we said our tax was, 1443.45. Good. Okay. So now let's figure out, we're going to go ahead, before we put, well, we can go ahead, 1443.45, let's put that here, okay, because that's what we deposited for the year. And so we don't have a balance due, all right? And we don't have an overpayment. So we're basically done with the first side, okay? So now let's look at the second page. Of course, you're going to put your trade name here, Clegg Company, and your EIN. I didn't give you that, so we don't worry about it. And then what we're going to do is we've got to report our food tax liability for each quarter. Note that it says do not enter the amount you deposited. Okay, so this is how much did you owe, not necessarily how much you deposited that year, that quarter. Okay, so like for here, after the first quarter, our liability was $322.20. Did we deposit it then? No, we waited until the third quarter to deposit it because that's when we had accumulated $500. But how much was our liability after the first quarter? This amount, the $322.20. So that's what you have to put on your Form 940. Okay, what you actually, what your liability was. Okay, so let's do that. $322.20 for the first quarter. For the second quarter, we calculated it as $149.64. So we'll put that here, $149.64. For our third quarter, it was $86.16. So we'll put that in, $86.16. And then for the fourth quarter, it was actually our $19.38 plus our $866.07, so our $885.45. Okay, so $885.45. And then again, when we add all these up, we ended up with $1443.45. Okay. And so then notice that this must equal line 12. So let's go back and look at line 12. That's this, okay? And then they just want to make sure how much did you deposit. Now, what if we had only deposited this, okay, our $558, and we were waiting until we filed our Form 940 until we deposited this $885.45. That'd be fine, okay, because you can do that. You can wait until you deposit, you can wait to deposit your fourth quarter tax until you actually submit your form because they're due on the same day. So in that case, what we would have done is we would have put 558 here, and this would be 00, and then our balance due would be the amount $885.45. Okay, but again, these two should equal our line 12, right? Okay. All right, so that's how that works. And then down here, you would just make sure that the president of the company or the owner of the company signed it and dated it, put their name, their title, and their phone number. Okay, and if you're a paid preparer, you would fill this out. So that's how you fill out a Form 940. Hope that helps you.